Hello, it's Darren from Invest Your Income. Welcome to my channel. I'm currently in the middle of doing a €40 Forex challenge just for myself really, and I've deposited €40 and I am currently at over €90. I'll show you the statement in a second to prove it, and this is all live account, but I just trade it just to show you basically what you can achieve. I've got my own personal account, but I'm trading this one alongside it, taking the same trades basically as I do on my personal account, and it's more than doubled within 9 days, so that for me is a very good result. This is the US dollar CAD we're looking at here on the 1 minute time frame. If you're looking for a solid Forex strategy, I would stay away from the 1 minute. I've traded the 1 minute for years. It does move around. You can trade it. I trade swing trading, so I'm just going to show you. It's probably easier showing you the differences. So here I've got a moving average I'm just going to put on. This is a 300 moving average. Now don't run off and go and put 300 moving average onto your charts and start trading that thinking that's the answer, because it's not. Okay, we're just looking. You can use any moving average really. I'll show you later. I'll put on different moving averages, but I'm going to do a series of videos probably to show you how exactly I trade, and if it's for you or not, then that's great. But what I look at is this on the price chart. I'm looking for deviation from that moving average. Okay, so that's basically my first clue for you. So trust me, a lot of people won't like the way I trade, because I do incur drawdown. Okay, it's just the way I trade. I accept it. I accept a drawdown. You have to have a larger account size. But like I said, I've done it with a €40 account. You just got to manage your trades better, really. So I'm trading on the €40 account, be obviously micro lots, so 0.01. So there I'll be limited to how much drawdown I can take. So effectively, I'll have 400 pips of drawdown that I can accept before the account gets obviously stopped out, a margin called. So I've got to bear that in mind whenever I take trades. But I don't trade the 1 minute, like I said. But let's just look at this, because typically people will put indicators all over everything, look for the magic crossovers and all this business, but that just doesn't work for me. Never has worked. I've tried it all. I've done it all. I've been trading 13 years now, and it's only really the last 2-3 years I've actually became relatively profitable. So if you look here, if we look for deviation from this moving average, okay, so any moving average is just the average, no matter how it's calculated, but it's basically doing the same thing, calculating the average over, in this case, 300 bars. So we're just looking for a deviation away from that, because that represents, for swing traders, an extreme. So for example, we're going to put some levels in here, and this is, bear in mind, this is the 1 minute, which I don't trade. Okay, so go back to the beginning of the day at 10:30. There's nothing going on here. There's no deviation. When I say deviation, I mean the distance away from that line. Okay, so we've got a bit of deviation here. I wouldn't say that's not enough for me. Comes back down. It's all doing nothing for the whole morning. It's midday now. This is nice. Okay, it's got a nice big bar, got big distance away. Okay, so I'm going to put a line in there to take that trade, and it comes into profit as soon as it hits the line again. You can trade that way if you want. You look at pips there, you only took about 6 pips or something. So there's nothing going on here, nothing here. Here again, so I'll take another trade there, another trade there, and it goes back up. And we've got another, what is that, 47 up to 54, another 7 pips, something like that. And large deviation again down here. So we've got already on the morning, well, 2 hours, we've got on one pair, we've got some, like, what's that, 12 pips or something. So here we've got deviation again down here. So I'm going to move this line down here. So we've got a nice deviation here, big gap between. But then people will panic because it drops further. So I'll be in drawdown, and I'll re-enter again down here, and it comes back up. The power of hindsight, eh? Bear that in mind when I'm telling you these things. It's hindsight's a wonderful thing. Now we've got a steep curve here. We're crossing over this moving average. Now a lot of people would say they draw a trend line in down here, and say they break the trend line and they're going to trade it up. I don't trade in that nonsense. I look at levels now and again. I don't trade channels or any of that stuff, because it's just 50-50, you know. That's my opinion. So we've got large deviation again going up here. This sort of area probably I'll start trade. So I'd put another one lane there. We'll move these ones up. It goes down, it comes back up again. Still got large deviation, so I'd enter again, and then it goes even higher and then enter again. You can see the downside to this strategy if it goes exponentially up. However, you can see here this trade comes in for basically nothing. This is a win, and that's a nice win as well. So we've got another, how many pips? 8, is that? 8 and 5. So 12 pips, about 25 pips for the day so far, and it's 3 o'clock in the afternoon. So we look again. If we're going to look again, and we go up further, so you may enter a trade up here, and then you may enter again, but I probably wouldn't. And that one would just come out for nothing. So that one didn't do anything. Got nice deviation again there, down here. So we'd enter a trade, move that one down, enter a trade here, and then we come again, we come further down, we take another trade down there. We come back up, that one comes out for nothing, and this one's is a win. It's just off one pair, and nothing's going on for the rest of the day really here. Oh, beautiful trade there, look. And this is today, bear in mind, which is the 17th. And then up here, fantastic trade at the end there, lovely deviation away, straight down. So we could have got 30 pips trading a pair today. So that's just on the 1 minute chart, and don't trust me. Let me change this for you. Just you take this away, okay? And it all looks a bit random. All the moving average does is gives you a baseline to work from. I trade the deviation from that, but it's just the way I trade. So if we can trade this, change this. Look, let's change this to say 900. I can't do that on that one. And then we're going to show it. So now it's a 900 moving average. Okay, we're going to do the same again. Okay, so we start at the beginning of the day, nothing going on as usual. Now we've got deviation away from there, so we'll put a trade in there, and put a trade in there. And it doesn't come down and touch now, does it? But you can see what the levels are. So we've got levels something like that, and then we've got more deviations. We put it into on the way up there, and then probably at the top there. And we come down, you can see what we're getting again. We're getting nice profits all over the place, aren't we? So we get deviation again, coming away. So we can enter again, and it comes back in there. And you take these ones, you can see like I've been saying to you. But in this instance, I wouldn't have got this trade because the moving average is different. And that's just the way it is. But then we're looking at deviation down here now, aren't we? Yes, so we've got deviation again. So as a solid forex trading strategy, that's pretty it in a nutshell. Off you go. You're about to be a millionaire. Obviously, it's not that simple. It is effectively. You do get situations like this. But if you look at these spikes, they come back. This is a good situation to look at. You always want to look at the downsides in the strategy. Okay, so this is what I look for. So let me get all these lines out of the way. So I'm just going to keep them on the screen, stop redrawing them. So we're trading up here, say. Okay, so 9 o'clock we start our day. We trade there, That's a nothing, and that's a profit. Profit, and here. So if you're looking at levels, this is a level. You can see resistance here. There's some tops here. So typically people would trade these levels and wait for a breakout of those levels. But here I'm looking at deviation. So deviation there, we've got a nice deviation. So we can put our first entry in there. Okay, oh, look what happens. It just keeps on going down. We've got massive deviation now. And then we keep entering again, and then we get hammered down here. Absolutely hammered. Okay, so this is what I'm telling you about this strategy. And this is because it's on a 1 hour time frame, and we're solely trading deviation. Okay, now deviation from moving average is part of the puzzle. Okay, this isn't just a one shot. You're going to make loads of money just by trading deviation off a moving average. Okay, now if I change this back to a 300, let's take another look at it. Now, okay, so here we go again. So we've got the deviations again, lovely here. Now here it's not quite so much of a deviation as it. You could take that one, it almost comes back and it doesn't. But you can see the steepness of this moving average. Okay, ring alarm bells to anyone who trades deviations, because you just got like a parabolic drop here. So you know you got the caution is advised in those situations. However, this is the 1 minute, remember, so the risk of a prolonged period like this, which you can get, is very high. Okay, it happens quite often, you can see. So we get this sort of nonsense here where it goes completely ballistic, and you know, because this is too close, you're not taking any profit out. So this is one part of the puzzle as far as I'm concerned. So here's the trading results I sort of show you. This is on my €40 account. So you can see where we started, and it wasn't even €40, and we are gross profit 58. And you can see I've only had one losing trade out of 14, and 92% profit ratio. And we've got profit trade. The average profit is 452, and my loss was 312. So this is obviously over 9 days. So my trades take days or weeks to pan out. I do incur the swap costs. However, it's working for me, and I just use the deviation and oscillators. That's all I use. Okay, so I'm going to go through the oscillators in my next video. I hope you can see the value of the deviations and the downsides of it. What we're going to do is just quickly go back, and I'm just going to show you the 4-hour chart. Okay, so here we're back on the 4-hour chart. Just ignore these lines on here. I just want to show you the same pair. So these are just lines we were putting on earlier. So we look at the deviation again, and you can see on the 300 it doesn't work too well. Let's go back to the 900. So now we can start to see a bit more benefit. So we've got deviations. We sell, we profit. We buy, we get profit. We sell, we get profit. We buy, we lose. We buy, and we're going to get profit here. You can go all the way back here. This is, remember, this 4-hour chart is beginning of 2019. Okay, now this here, this is obviously, you got a steep uptrend. Okay, so you'll only be more or less not scalping, but you'll be taking smaller profits. So if you've got a big trend like this, likelihood is you're going to have pullbacks like this. So we'd just trade a small amount with an oscillator, and I'll show you how that's going to work. But we're looking for a deviation again, and then a pullback, and we're going to come out of those trades. When we get situations like this, we can trade them back up. This is beautiful. We can trade these all day long. Okay, but we're not looking, bear in mind, you're not looking to get the entire move. You will never get the entire move, from my experience anyway. Situations like this where it's flat, you could take these trades. They do represent more risk, because you can suddenly get breakouts like this. However, that'd be a nice trade as well. So here we get a level. It's coming back down to this level and just gone straight through it. We'll look across. So we'll probably take a trade there, and re-enter the trade, and then re-enter and re-enter. So I could have 4 positions on there. This one will be a loss. This one will be flat, a profit, and a profit. So overall we'll be in profit. Okay, but you're looking at, for this to pan out, that's the 20th of June to 20th of June, and that's coming out on the 29th of July. Okay, so if you're trading just on this without the oscillators, you could be looking at a period. Even so, you could be looking at a long period of drawdown, which incur you costs as well. So, you know, but when I get this situation down here, I'm going to be entering more trades, okay, because it's showing signs of reversing anyway. So you can have an idea of how price action works, but when you see this here and it just goes straight through that level without even hesitating, I'm not a real candlesticks man, but I will look at them in conjunction with oscillators. So for me, I wouldn't have entered there. I would have probably entered there in any case. But if you had entered there at that level, you'd have taken a loss. But this is just under 900. Now look what happens when we change this. Let's change this to a 3000. Okay, now look at where the time frames expanded out again. So you can take deviations from this. You can trade down here. You know, this comes up a massive win there, and then it comes down further. Again, you've got deviation away, so you could buy that there, buy that, buy that, buy that, buy that, and it comes back up. And then again, don't buy these, and it comes back up. And you know, you don't necessarily come out when it crosses. It's just an idea. Hopefully I'm opening your mind as to how I trade. You know, it's an elastic band. I know this is said all over these training, you know, courses and all this crap, but this is it will come back to the moving average. As just the pure nature of a moving average, it will always go back to it. It has to. So here we perfect opportunities. You know, when I see this kind of stuff, like these opportunities here and these opportunities here, I get excited. I'm not worried about the drawdown. You know, you've got to accept the fact you can have drawdown with my system. If this doesn't float your boat, you know, good luck to you. So, it's just the way I trade. And when you go on the larger time frames, yes, you are in drawdown, and yes, it goes over a long period of time. But your profits, you know, you look at your profits here. This is October to November, so it's only a month again. Yeah, but a month for some people is too much. You know, they want instant profits. But if you traded there, you traded here, you trade here, here, you've got 4 trades on, and they all come into profit for 300, you know, 330. You're talking about 250 euros, and 200 euros probably another 150, another 100. It's not bad, is it? That's if you just play, you know, trading small sizes, but it's just, if you've got a micro account, you know, those 25 euros on a 40 euro account, but you got drawdown there. You know, this is just one pair. So I was trading, you know, numerous pairs, and just doing. I would trade it a short amount, you know. So I would have been entering here, say, I just trade this little move, and if it entered and didn't go my way, I'd re-enter again and just trade it back up and come out here rather than waiting for this move. Just trading the shorter times. So I hope this has been of use to you, a bit eye-opening, because it's, like I said, you're kind of getting the benefit of my knowledge after trading at different systems and trying different people's systems and buying systems, and this is all for free. I don't want anything off anyone, just showing how I do it. So I hope you find it enjoyable, and I hope you see now when we look down here, you know, we looked at this. This for me was just, you know, doesn't get any better than that for me. It's just massive deviation, and I'll be in a trade here, and we're comfortable, very comfortable. Okay, so we've already taken big profit. Come out half your position if you wanted to, leave the rest to run. So anyway, I'll go on to the oscillators in my next video. I do hope you've enjoyed it. I know it's a different way of thinking about the markets. If it's not for you, thanks very much for watching the video in any case. And if you are interested, please do watch my other videos and help me build this channel if you can. Like and subscribe and all the good stuff. And I will get onto oscillators and combine it tomorrow probably. Thanks very much. Have a good evening or day, whatever you're in, and I'll talk to you soon.